Thank you. First presenter at the first ever DiG festival, no pressure at all. I might get my badge numbered for later on and get it framed. The theme of adapt or die is not a new one, and change, one of the interesting things about change, do we have a clicker? One of the interesting things about change is that it's like riding a tiger. Once you actually get on it, it's impossible to get off. And the fact of the matter is that whether you are, as Craig said, an established giant or a startup, change is still a massive driver of business. And in fact, as I'm assuming we were one of the established giants that were being referred to, we have our own unique challenges with change, as you can imagine. But I think you'll find, and as we talk about the future of payments over the next 20-25 minutes or so, you'll find that just being an established giant doesn't mean you can't embrace change and certainly be a driver for change at the same time. So let's have a bit of a chat about that. Payments is an interesting one. A lot of people think of it as kind of boring, a kind of discrete transaction at the end of a purchase. But I had, funnily enough, the timing was impeccable, an experience this morning driving up from Sydney that highlights to me the changes that are coming in the payments world. I stopped for petrol, and the petrol station, I won't name them, had one of the pay at pump, we call them in the business, unattended card swipe machines, which allow you to walk up to the pump, swipe your card, fill up your tank and be on your way without stepping into the petrol station. I tapped my card on the contactless reader, which didn't work. I swiped my card. It said, pick up the pump, picked up the pump, at which point it said transaction cancelled. And an announcement came over the PA system saying, oh no, pay at pump's not working, come inside. So I went inside, and they had to, because I'd already picked up the pump, they needed to pre-authorise my card for some reason. I'm not quite sure why. I put my card in the FPOS machine at the counter, which wasn't bolted down to the counter. It promptly fell off the counter and rebooted itself, at which point the guy behind the counter said, you're probably best going to the ATM over there, withdrawing some money and paying cash. So I went to the ATM, which wasn't a CBA ATM, so I paid $2.50 for the privilege of withdrawing cash and paying for my petrol, went and filled up, and then went back into the store and paid for my petrol. I think it's safe to say that is not the ideal payment interaction. But what it does do is highlight so many opportunities for change in the payment ecosystem. So in discussing the change in payments, I think we're also discussing a little bit of the CBA journey, and I beg your indulgence for a minute or two as we talk about where we've come from. Not that long ago, CBA was a government-owned bank. I think it's safe to say our customer satisfaction scores were somewhere between the cellar and the basement, and our nickname was the Cardigan Factory. Not exactly the most innovative, market-leading position you want to be in. We were by all means huge, but that doesn't mean that people really liked dealing with us. If you look at the Commonwealth Bank today, we've gone a little bit hip. Commonwealth Bank today is, while still relatively conservative, Australia's second most innovative company. We are at the absolute forefront of change in the payment space and in many parts of banking. In fact, in discussing, I spend some time every year talking to banking leaders from around the world, and in discussing our agenda with a number of banking leaders from the US and Europe, I would argue that we have one of the most progressive technology and change agendas of any bank in the world right now. And in fact, that's reflected by the fact our customer satisfaction is #1 in every single market that we operate in. Right? And that change is really a function of innovation. So payments are only part of that innovation story. And I think it's important to understand as you go into the next couple of days and engage in a number of discussions around innovation and what innovation means and innovative ideas. I think it's important to understand that there's two tests that something needs to pass in order to be innovative. And there's all sorts of philosophies and academic studies on innovation, and I'm sure we could all come up with our own definition. But there's really two tests from my perspective. First of all, innovation needs to be new and different. It needs to do something differently. And the second thing is it needs to be demonstrably better. History is littered with good ideas that go nowhere because they provide no benefit to the ultimate end user or customer. So ultimately, innovation and the success of innovation, and payments is no exception to this, depends on how much better you can make things for your customer. So that's really been a driver for us and a driver for a number of players in the payments industry in forming, I guess, the strategy for the next few years of payments. So where do payments sit? Many of you, those of you who have done any sort of marketing course or degree or read anything on marketing, recognise a variation of this funnel, the traditional purchase funnel, whatever you want to call it, which is a really structured approach to the way people buy things. And whether it's an individual or a business, the fact of the matter is when businesses buy things, ultimately it's a person or group of people making those decisions. So there's quite a structured approach. And at the end of that structured approach to making a decision to purchase something, there's this interaction that is a payment or was a payment. It didn't matter what you were buying or where. It didn't matter what the value proposition of the person or business you were buying things off was. Ultimately, there was a discrete transaction at the end of this funnel that consisted of a payment. It was a separate task. And what ultimately the position we got to was a mismatch in priorities, I think, between the people doing the buying, the people doing the selling, and the people providing the payment infrastructure that managed that flow and managed that transaction. And so ultimately, if you were a business selling something, you were beholden to a bank or a payment provider or whatever the case may be, no matter whether your value proposition was speed or luxury or knowledge or whatever it is you were trying to articulate as your value. Ultimately, everything comes to a grinding halt when you have to pay for it. As shown pretty horrifically by my experience this morning trying to buy fuel. But that's no longer necessarily the case. That traditional funnel is now anything but traditional. And whilst a buyer still goes through that flow, they do it in random order. They accelerate through different parts of the flow. Traditionally, if you were a retailer at a bricks and mortar store, as a good retail salesperson, you could recognize a customer that walked in your store as to which stage of that pyramid or that funnel that they were in and tailor your sales pitch accordingly. Now, it's really difficult to have that luxury. Any or none of this interaction can happen in front of you as a business. It can happen in random order. Customers can go through the cycle a dozen times in 5 minutes as they're standing in a store on their smartphone, doing research, going through, checking other people's opinions, looking up competitive products while they're standing in the store, not necessarily trusting what the salesperson says, checking prices, all of that sort of thing. And then the payment is all of a sudden becoming part of that whole process. It's less and less about this discrete stop sign at the end of a transaction, and it's more and more about being part of the purchase process. And something that has become extraordinarily important now is the post-purchase behaviour. With the advent and rise of social media, at any point in time, if a customer is unhappy, at any point in this funnel, they can let the world know. And all of a sudden, that impacts a whole other, set of purchase funnels. So I think one of the drivers of change in the payment space is a recognition that the way people buy things has fundamentally changed. is not about new technology for technology's sake. It's about new technology that recognises the change in the way people buy things. So now we know that payments are an integral part of the process, and that payment interaction needs to reflect the value proposition of the seller, and therefore needs to reflect the needs of the buyer. We come to kind of the crux of the discussion, which is, what are the drivers of change in the payments landscape? The recent drivers and the things that I think will continue to drive change in the landscape for the foreseeable future. I think there are three key drivers and one key, I'll call it a non-negotiable. And those three key drivers are convenience, mobility, and customer experience. And the key non-negotiable is security. Because ultimately, there are plenty of ways to handle a payment in a non-secure manner, but that's not necessarily fulfilling the need of either the buyer or the seller, nor is it certainly doing any favours to any of the intermediaries involved, whether that's a bank or a non-traditional payment provider. So when you take those three things, convenience, mobility, and experience, what you end up with is the core of what you'll be talking about today and what we as a bank have been working with for the last little while, which is customer-centric design. So payments are no different to any other area of innovation. The customer needs to be at the centre. So let's take those in order. Convenience. Cash has traditionally been the most convenient way to pay for things. And, you know, the raw numbers say cash is still king. For example, if we look at one of the more recent studies done by RFI, 89% of consumers in 2013 used cash for the majority of their purchases. Right? Now that's a big chunk. Most consumers are still using cash for the majority of their purchases. Having said that, if you look at the trend, in 2012, 12 months earlier, that number was 94%. That's a pretty rapid drop-off. And the most important number to look at is not that 89% of consumers are using cash to pay for things, but that cash represents less than 15% of the value of the transactions in the market. So there's 85% of the value of payments in the market that are not happening by cash. The other thing to keep in mind is, by our estimates, handling cash costs the economy between $4 and $4.5 billion a year. So whilst cash has a perception of being convenient, it's actually not. And consumers are realising that, and I don't think that's any surprise to anybody here. Convenience, from my perspective, is about customers and consumers doing things on their terms, paying when they want, where they want, whether that's in-store or online, or sitting on the couch, and how they want, whether that's by cash or by card or by phone or any other device that may come along in the future. Payment innovation is not about the device. The device is only a third of the story. You've got the device, you've got the software that needs to sit on the device, but the most important thing is the infrastructure that sits behind it all. From a seller's perspective, convenience is different. From a seller's perspective, convenience is all about being able to transact 365 days a year, regardless of the method that the customer wants to use, and having speed and security involved there as well. So I'm also proud, I guess, to throw in a little bit of a CBA plug in there, that we are currently the only bank that provides real-time, everyday banking. And the RBA has recognised how important that is and is trying now to articulate, I guess, a way for the entire Australian payments landscape to operate 365 days a year, 24 hours a day. Because that's when people are buying things, 365 days a year, 24 hours a day. So part of that convenience story comes down to things like contactless, which I'll talk about in a second. The thing about contactless and other areas of convenience, I guess, is the fact that there is now an integration, I guess, of customer experience. I mentioned earlier, whether a customer is in-store or online or, transacting via an app, there's a consistency of experience being driven across that landscape. If we look at contactless, it's got a lot of things going for it. To my mind and from our perspective, it's the natural cash replacement. It's fast, it's secure. If we look at volumes last year, over 30% of card volumes last year were contactless, and that growth tripled over the previous 18 months. So we're seeing a massive uptake of contactless transactions. There's better queue management. It's got much lower cost of handling cash. If we look at case studies such as sports stadiums where we've introduced contactless, you've got queue times or transaction times going down from up to a minute for a credit card down to 4 to 8 seconds for a contactless transaction and less loss from staff handling cash. So that's the convenience piece. Let's move on to the second piece, which is mobility. Mobility and portability is, I think, the second driver of innovation in the payment space. Again, it's not going to be any surprise to anybody here. The important thing about mobility is what's happening is putting more power in a consumer's hand. When someone walks into a store, a retail store, with a smartphone or a tablet in their hands, they've got more power in their hands than most retailers have in their back office. And one of the interesting discussions that we have with some of Australia's largest retailers is how do they manage that? How do they keep up? It's becoming a technology arms race between retailers and consumers. And that mobility is driving a fundamental change in the way payments are handled. Some proof points are our own experience. Mobile banking has reached its tipping point. Last year, 51% of electronic banking, personal electronic banking, happened on smartphone or tablet, as opposed to on PC, computer, desktop, whatever you want to call it. So we've passed tipping point. The other interesting thing is when we talk about convenience, we can actually track usage times of mobile banking, and you see peaks, for example, at halftime in footy games. So you see a massive uptick on a Sunday afternoon at halftime in a footy game of banking logins. It used to be that people walked into a branch, doing your banking was an event. You'd walk into your branch and you'd, wait in line and do whatever you were there to do. Now, your banking is something you do at halftime. So mobility is absolutely fundamental to the change in the payments landscape. And we look at things like Kaching. You all, or most of you, will be using some sort of mobile banking app. If you're not, again, you're, as demonstrated in the previous slide, as a Commonwealth Bank customer, you're now in the minority. Banking apps, from our perspective, are a key articulation of that move to mobility, and Kaching is a standout there. Again, a bit of a plug, won numerous awards, was the first really true mobile payment, digital payment app, wallet, whatever you want to call it, in the market. And through something like Kaching, you can pay a person or a business or a utility, or whatever the case may be, by mobile, if you know the mobile number of the individual, through Facebook, via email, bumping phones together, using BPay. Pretty well, this is the marriage, I guess, of mobility and convenience. No longer do you need to know somebody's banking details and remember strings of digits for BSBs and account numbers, or write checks and stick them in a mail and as a business, wait for that to be received. So the key drivers in mobile are really security is the key factor driving there. Finally, we have what I consider to be the most important piece of the change in the payments landscape, and that is the customer experience. And this is what's driving everything else. as I mentioned earlier, instead of the payment being an undifferentiated, relatively painful, discrete part of the buying process, it's part of the customer experience now. And anybody who's walked into an Apple store will recognize that for certain value transactions, when you walk into an Apple store, you can talk to a customer service person who can actually manage the whole transaction, beginning to end, take your payment, email you a receipt, without you going to a register, without you queuing up. You almost don't even realize you've paid for it. Right? Apple stores now have the ability to load an Apple Store app on your mobile, and you can manage the whole transaction online while you're standing in the store. Right? So it's that customer experience that has become key. Some of you may have seen some of the I guess, flagship Lego stores overseas. I don't know if there are any in Australia. I was lucky enough to be in a Lego store in New York last year, where you pick up a box off the shelf, you stand in front of a camera with a screen, and what happens is on the screen, the camera has recognized effectively what Lego kit you've picked up and what you're holding in your hand. And on the screen, you see a real-time image of yourself holding the box with whatever kit it is being built on the box, so you can see it on the screen. Rotate the box, have a look at what it looks like, have somebody come up to you and say, "It's pretty cool, isn't it?" and take your payment while you're standing there marveling at the Lego being built on the screen, and then going home and realizing that it's worse than IKEA furniture and it's going to take you a week. So, you know, that in-store experience is fundamental, which means, hang on, point of sale. What happened there? We've had digital wallets, and we've got, you know, e-wallets, and we've got mobile payments and online payments and all of that sort of stuff. What happened at the point of sale? 46% of all customer purchases still happen at the point of sale. And for years, there was no innovation at the point of sale. The EFTPOS terminal that you see at a point of sale now is not that different from the one that you saw 10 years ago. Yes, it probably accepts contactless now, and it may have a color screen, but pretty well, other than that, it's the same. Thankfully, not for much longer. Some of you may have heard of Albert, and we have, I think, a couple of Albert devices downstairs that you can play with. The CBA has basically gone with the philosophy that if you can't find it, build it yourself. And we've looked at the point of sale, and there is really, given the lack of innovation in the point of sale anywhere in the world, we have built our own world's first, what we call an omni-commerce terminal. It's run on a hardened Android platform, and I believe there's some sessions later today on developing for Android, and we'll discuss Albert, where the conversation we as a bank are having with a customer is fundamentally different. It's not about, okay, what do you want to do as a retailer? Here's your payment terminal, and everything comes to that grinding halt that I spoke about. But what is your customer value proposition? And once you've articulated what that value proposition is, well, you can load apps, download apps, build apps. You can tailor the Albert terminal to the value proposition that you want. So, for example, for the fuel provider that I was speaking to this morning, they can run high-definition video, you know, prompting you to buy Mars bars and Coke and all of that good stuff for you. It's completely mobile. They can use it as a queue buster. It's contactless. So for someone like them, it's all about speed and convenience. But for someone like we've been talking to, for example, some of the world's largest luxury goods retailers, for someone like them, it's all about the customer experience. You can have online catalogs on there. There's a camera on the thing, and one of our luxury retailers was talking about the fact that they would allow people, they're looking at building an app that would allow people, once they've bought something, to use the camera to take a photo of them wearing it and post it to Facebook directly from the payment app. So there's literally a question, as you're paying for it, you want to post it to Facebook. And the beauty of it is that what you're doing is actually collecting customers' email details, Facebook, details, all of that sort of thing at the point of purchase. It's allowing you as a retailer to then tailor your marketing. So I encourage you to, if you've got a few minutes, head downstairs and have a look at Albert. I only have a minute or two left, which is good. I will only take a minute or two. The other piece that I want to talk about very briefly is quicker. Most of you, if not all of you, have heard of QR codes. We've actually worked with a few customers in Australia, two that I would quote to talk about, I guess, some of the results, Hoyts and Etihad Stadium, around making payments and that payment fundamentally different. So you can walk into a Hoyts La Premiere, which is their kind of upmarket gold classy kind of cinema thing, and sitting on the table next to your seat is a QR code, a Quicker code. Using the CBA and MasterCard Quicker app, you can scan that QR code while you're sitting in the movie. Up comes a menu. You can choose what you want to eat, drink, water. Hit pay. It's recognised what seat you're in. You can choose what time you want the food delivered, and while you're sitting in the movie, watching the movie, someone comes to you and brings you your food and drink, or a pillow if it's a poor movie. At Etihad Stadium in Melbourne, for example, in the Premier seats, there's a QR code or a Quicker code on the back of the chair in front of you. You can order your beer and pies and things like that, and ultimately either have it brought to your seat if the game is on and you don't want to leave your seat, or for larger volume transactions, just simply go and collect it rather than stand in line to order, then pay and then collect. So it's all about the customer experience. What is the customer there to do? The customer is there to watch sport, or the customer is there to watch a movie. The customer is not there to stand in line to pay $30 for a beer. Finally, we've got the business piece. We haven't forgotten about business. A large number of transactions in the economy happen from business to business, not business to consumer. And so there's a lot of development, which I'll only just mention now, in the B2B payment space. For example, the ability to manage transactions and payments from a tablet, not just a ka-ching type application, but something like Combiz, which is probably the most robust online banking platform in the world. 30% of Australia's employees, thereabouts, are actually paid through Combiz platforms. So we have a Combiz mobile offering, and obviously things like everyday settlement and reconciliation technologies to allow businesses to match payments at the back end and whatever are making life a hell of a lot easier for business as well. So finally, the crystal ball. I think the things that are driving payment innovation over the last couple of years and over the immediate future is, first of all, an understanding that payment is an integral part of the value and service proposition. It is no longer a discrete and separate part of a transaction. Second of all, omni-channel is important. It's not about online versus offline, not about online versus bricks and mortar. It's about consistency. It's about the ability for a customer to stand in your store and transact online, or be online and collect something from the store. It's about an integration of channels, not about discrete channels. Third of all, it's about portability. It's about data. We haven't really spoken in depth about data today, but I'm more than happy to have a chat to anybody who's interested afterwards. Security is fundamental. And finally, I would argue that we're finally seeing what I believe to be the beginning of the end for checks in the economy. They're dropping, check usage is dropping off by nearly 20% a year. So that's an asymptotic curve. It's approaching zero, may never quite reach zero, but we're seeing the death of checks. So that's it from me. The payments piece is really just part of the Commonwealth Bank innovation story. More than happy to talk to you about other parts or that part. Come downstairs and have a chat to the folks on the stand. Otherwise, thank you for your time and good luck for the rest of what looks to be a really exciting conference. Thanks, guys.